Welcome back, everyone, to another episode of the housing market update for Southwest Florida. This week, we are getting more and more information that's coming out after Hurricane Ian has pretty much devastated quite a few of the areas, not just the beach area, but also up and down the river. We're finding more and more homes did get flooded, especially in the southwest parts of Cape Coral, obviously along the beach, but also up the Caloosahatchee River on both sides. So, with all that information, let's get right into what's going on with the market stats. We are seeing some trends reemerge that were pre-hurricane, pre-Ian. One of those including the actual inventory is starting to pick back up. We're not quite back to the levels we were right before the hurricane, but we're getting very close. So this, as we're going to start off with, as always, the southern part of Southwest Florida, Cape Coral down to Naples. This does include Marco Island. New listings last week were at 661. This week they're at 660. So really no change here for new listings. However, these solds went from 604 to 505. So we're seeing demand has been suppressed, especially with interest rates now where they're at almost 7%. Pendings went from 617 last week to 635. So that did increase a little bit. A lot of that is starting to come from cash buyers. There are a lot of flooded homes that aren't able to be financed right now, and a lot of those homes are going under contract fairly quickly because the prices at which these homeowners are selling them for is quite a bit lower than what they are. So we were just in a couple neighborhoods over the last few days where homes around these homes are going for around $1 million. People are selling them to $300,000-$400,000 because they did not have insurance on them. They're pretty much gut jobs, so you're seeing quite a significant reduction in prices. People are still trying to push up those prices to get, as much as they can, but we're going to be seeing a lot more of these types of homes come on the market, especially in the next couple of months as everything starts to really be a little bit better understood by homeowners with FEMA and insurance options. All right, latest inventory breakdown. Single family homes were at 4819. This week it's up 4861. That's up just 42, but still it's headed in the right direction. We want to see more inventory coming on to suppress those prices. Condos went from 1994 to 2029. That's a gain of 35. We had a net gain last time of 54. Now we have a net gain of 77. So again, we are getting back to pre-Ian levels. Multifamilies, not a huge change here. It's been hovering right around the 130 to 140 range. Last week 136, this week 141. That's up 5. Foreclosures actually lost 1 from 48 to 47. Now for the northern part of Southwest Florida, from Punta Gorda up to Sarasota, we did see quite a big jump here in inventory levels. New listings went from 1502 last week to 1566 this week. That's up 4%. Solds went from 1601 to 1498. That's down 7%. So this is where we're starting to see inventory build up. Solds have been down quite a bit. Pendings 1495 to 1456. That's down 3%. And we did see the price increases go up just 3%. So inventory. Single families went from 3959 to 4137. That's up 178 units. Obviously, that's what we are hoping to see. And then condos, same situation here, 1392 to 1530. That's up 138 units. So we had a net gain last time of 35. This time we have a net gain of 316 units in the northern part of Southwest Florida. Multifamilies went from 59 to 70. That's up 11. And foreclosures went from 42 to 38. That's down 5. Breaking down the interest rates, these are averages, and this information is according to Zillow's averages as well as Bankrate. NerdWallet gets their information from Zillow. They have the average going from 6.869% last week to 6.997% this week. Pretty much 7% interest rates for mortgages. So less than a year ago, you would be somewhere around the 3% range. We've already doubled that in less than a year, which is what's weighing down on demand so much. Bankrate average went from 7.04% to 7.32%. So that's up another 28 basis points as well, and that is crushing demand right now. Mortgage applications, just to keep this in perspective, we've seen over the last 4 to 5 weeks just decreases in applications. That's down another 1.7%. Refinances did actually increase a bit. FHAs did increase. Both of those, I'm not really sure why the refinances would have increased all that much, but If the total applications are decreasing, that would probably allow even just a small percentage of even staying the same amount of refinances would look like an increase. VAs and USDA, no changes here. And then finally, so what's the scoop? Things that are going on right now that we're finding out. There's a lot of new information being released right now about what's going on with some of these communities and these areas after the devastation. First of all, what we're seeing, or what I'm seeing specifically, there's lots of fixer-upper inventory coming on the market. A lot of these homeowners had no flood insurance on their homes that were flooded. Like I said it right in the beginning, they're reducing their prices down quite a bit, almost in some cases over 50% reduction in what the market prices are, which does allow a decent amount of rehab opportunity there. If you do want any information on those that are coming to market, just shoot me an email, or you can send me a text or give me a call. My number's at the bottom of the screen. I'd be happy to send you lists of that kind of inventory that's coming on the market. With that in mind, prices, Ian did destroy a good amount of inventory that was on the market, and a lot of people had to take it off for insurance claims. So the prices right now are likely to stay steady in the short term. Parts of Collier County, we're seeing actual price increases. And then in parts of Lee County, we're seeing price decreases. So with that short term in mind, rental prices are going to keep increasing. Some of the rentals that we've been hearing about, just to go to the people who are in the area just for work. I mean, the prices that people are getting for rental is outrageous. We've been hearing rental rates at $13,000 a month. Keep in mind, this would be a multiple workers staying in this unit, but that's crazy for the amount of the sizes of some of these homes. Also, we are getting information about manufactured communities, especially more near the beach, where there were a lot of manufactured communities and mobile homes. Some of those communities will not be allowed to be rebuilt. I'm not sure what's going to happen. There is an owner of that community, obviously the land, especially the communities where the land was leased. They are probably going to either sell the land off to somebody or a developer and have it developed later on. But because of what has happened, a lot of the codes will be changing with what's allowed to be rebuilt, especially near the beach. So I have a feeling that that's going to also, we just lost 1,000 homes in one community that will not be rebuilt. And I'm sure there are a lot of other communities talking about the same thing. So that's all information that, as I get it, I will deliver to you as well. But like I said, if you have any specific questions on inventory, or you want specific inventory like the fixer-upper inventory we're seeing coming on, shoot me an email, give me a text or a call. I'm happy to send that and share that with you guys. But that's really it going on right now. Some of the things to be aware of that's coming up right now: the Fed obviously are going to hike the rates. We're not sure, but it looks like it's going to be another 0.75. They really are trying to crash the real estate market, to put it lightly. They want the demand to be crushed. They're trying to get inflation down. So that is what they are trying to do. I do still think that they will be reversing course within the next month or so, just because of what we're seeing coming out for data in the housing market as well as the stock market. But there is a lot of stuff going on in the stock market right now as well that you will probably want to keep an eye on. Again, mortgage rates, keep an eye on the 2 and 10-year bonds. That will tell you where they're going. Add 2.5% to them, and you will get the upcoming future rates for mortgage rates. So I hope you all enjoyed the information. I will have another one of these coming out next week, and I will have some more information coming out this week in another video coming up in a couple of days. So stay tuned to that. Otherwise, I hope you all have a great week. And as I said, give me a text or a call for any information or questions. All right. As always, stay safe, and more importantly, stay free.